Hey guys, welcome back to another episode of OX Research. Today, joined by some relatively unfamiliar faces on the show. We've got Luke Leisure from the research team. Glad to have you on, Luke. Few and far between appearances. And then Mark and Carlos, frequent members of the show from the research team. How's everybody doing today?
Yeah, all good. Prices are up. The weather's good by me, so I'm very happy. And the weekend is right around the corner. So yeah.
Yeah, we're good. Trying to keep up with everything that's happening this week, but it's a bull market for sure.
Yeah, staying busy, and some of the coins are bid, so it's a nice way to go into the weekend.
Yeah, 100%. Markets are exciting. We've got a pretty new hire on the team as well, asking this morning why are markets up. The classic kind of question in crypto, needs no reason. It was preordained. I guess other exciting news before we get totally into the topics for today. DAS London coming up, our next kind of Blockworks conference event. So Blockworks Digital Asset Summit, DAS, is back in London, October 13th through the 15th, crypto's premier institutional event. Top speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers. Think BlackRock, Circle, Coinbase, the UK Parliament, even Athena. Some of your favorites will be there, all under one roof. So people like Guy Young from Athena, Rebecca Rettig at Jito Labs, and of course some of us from Blockworks Research. Though I don't think we know yet. We know Mark will be there. He's based locally, so that's an easy one, I think, for him to drop by. The rest of us kind of TBD, but I'm sure you'll see some of us there. So there is going to be a VIP dinner October 13th, open to speakers and VIP ticket holders only, which will sell out. So use code 0x100 for £100, me matey, off at checkout. We want to see you at DAS. So go ahead, get your tickets, and you'll see some of us there. You'll see Mark there. He's a fun guy to hang around, so definitely worth the trip to see him, especially if you're over there in Europe. I don't know. Have you guys... I've not been to a DAS. I've only been to permissionless personally. So maybe if you guys want to share some thoughts on prior DASs, get what's exciting about them, or just favorite experiences from prior DAS event.
I've been to 2 DASs so far. This will be my 3rd. It's definitely more of an institutional event. People wear suits, not your typical crypto conference. And I think, the topics is, maybe I'm a bit biased. I love them. They're around stable coins, they're around tokenization, they're around integrating blockchain services into the quote unquote real world, even though I hate using that term. And I think these kind of conferences, and I don't want to shill it, but like Blockworks DAS is where deals get done. There's a lot of networking and a lot of you can come away from these events knowing that something has shifted the industry forward. So it's one of my favorite ones to go to.
Yeah, I was at DAS New York City this past March, and it was probably my favorite crypto conference I've been to. The quality of attendees and speakers is incredibly high. So just the nature of the conversations you get to have with people there is particularly invaluable. And there's really no froth. The conversations and discussions are very measured, level-headed, and focused as well. So as Mark said, great place for deal making.
Love it. Well, like I said, not our usual code 0x10. It's 0x100 this time, 100 pounds off, 100 pounds off tickets. So check the link in the descriptions. Find them at the DAS website, wherever they are. I'm sure the producers have that figured out. And hopefully we'll see some of you guys there. But outside of DAS, I guess we hinted on it. The markets are kind of excited right now. ETH is at or approaching 4K. I think it's been sort of a while coming for that one. The DATs are kind of still doing crazy things. Tom Lee is on his tour of kind of the TradFi media scene to extol the virtues of treasury companies and ETH. Mark, I know you shared some kind of interesting data and information around kind of relating Bitcoin or at least crypto to some other sort of like stock-based metrics from, sort of like where we're at from, or at least correlation to sort of like risk-taking activity, I guess, which I found interesting, as well as just like where deal flow has sort of been at in the crypto markets. It feels like a good time to maybe dive into that. You said earlier, we're definitely in a bull market, so maybe it's worth kind of going over the numbers and really taking a look back at kind of the growth that we've seen.
Yeah, for sure. A lot there. Let's look at something interesting I found was the relationship between Bitcoin and gaming stocks. I used VanEck esports and esports ETF as a proxy here, and we see like the ETF came out in 2018, and since 2018 it's had a 90% correlation with BTC. I don't know what this means for BTC. I mean, I think it's high risk, high reward. Gaming stocks. For gaming to go up, you need a lot of consumer discretionary spending. Maybe for Bitcoin, you need a lot of investor discretionary spending. Both are representative of a risk-on environment. So I mean, the correlation is pretty strong. What this chart here doesn't perfectly show is that late 2023 there was actually has been a reduction in correlation. Like there's been a bit of a divergence from Bitcoin and these gaming stocks. And I think I'm positing that that's because of the digital gold narrative and then the expectation of the ETF launch and then the actual ETF launches and then the institutional flows coming in. And that's why BTC has kind of diverged a bit from not only this ETF, but then also the other altcoin markets. And then interestingly enough, I was just curious and we don't have the chart here, but I was looking at altcoins versus that same gaming stock, and it was a weaker correlation, like 70%, still meaningful. But then I lagged it by 90 days, the gaming ETF, and it showed me that, and then the correlation went up into the 80s, depending on the year frame, and it kind of showed me that gaming stocks might actually be a leading indicator of the altcoin market, which I just thought was interesting, and again, just probably more to do with like macro. What's going on in the macro environment in terms of like high interest rates and where quantitative tightening or easing and where we are in that stage of the market. But I posted this on Twitter, and then I mean I think even Carlos asked me, does this correlation to gaming stocks mean that Bitcoin is a meme? It feels like to have such a high correlation with game is like somebody up there is using a controller and moving up and to the right with both of these classes.
I mean, it's an interesting comparison. I would never have thought of like doing a correlation between Bitcoin and gaming stocks. I was surprised it was so high, like 90%. That's too high for me. But I think you mentioned that in recent times it has decorrelated now.
Yeah, as in it's still correlated, but not as much as it was prior to prior to the launch of the ETFs, which I think is good. I'm maybe like you would. This correlation makes you feel a bit uncomfortable, and I hope further divergence continues.
Yeah, I guess you've had the ETFs, and then probably in more recent times you've had a bunch. I mean, you've had Sailor's bid, but then all of the additional kind of treasury vehicles that have come online, which I don't think there's any indiscriminate buyers of like gaming stocks pushing up those prices in the same way. I think another interesting one that we have on the Blockworks Research dashboards around crypto deal activity is total level of like fundraising, venture funding, M&A, debt financing in the industry. And you highlighted this yesterday on our subscribers only call for Blockworks Research subs, Mark, but just to see that we've it's just under that 6.3 billion month that we had at the end of 2021, have nearly eclipsed that kind of like all-time high month in deal activity. Obviously there's some big ones here recently, right? Pump Fun raised a ton of money that in one huge deal, which has probably contributed significantly to this wick on this candle. It'll be interesting to see if this is kind of like a one-time thing, or if we see a continuation of like the amount of deal flow we had over the past couple of months now. And if this trends higher or whatnot, because I do think it's interesting to point out that, we've talked about IPO activity on previous episodes with James Kristoff. And the takeaway there was that 2021 was like a massive blow off for overall IPO deal activity. And we're still way away from those levels seen in 2021 in aggregate. But at least within crypto, we're like kind of back at the highs seemingly.
Yeah, for sure. I mean, I hope it doesn't mirror that 2021 period where it's just a blow off top. I'm hoping, I don't know if this sounds bad. I'm hoping this is the peak here and it just kind of steadies to similar levels we saw in like June, May. Let's just keep it steady lads, right? And I mean, and another big thing here is the Michael Saylor raise for their preferred shares. It was Marathon, one of the biggest BTC miners. They raised nearly $1 billion in 0% convertible notes. And that's a lot of debt financing. And I did mention Marathon too. Marathon is an interesting one for me, and I don't want to shill it. It's just interesting. It trades. At last I checked, it was slightly below NAV, which just means you get the Bitcoin at cost, and then you get all of its mining business, its real estate, its IP, its rigs for free. It seems like a very interesting one. But yeah, hopefully fundraising picks up, but we don't have a repeat of the last cycle.
Yeah, good call out. If it's wouldn't be as exciting if that was kind of the blow off top kind of spike right there. We'll have to see how the next few months fare, but at least right now, I mean, we've kind of mentioned it, the past few months like have very much been a revival of IPOs and ICOs. Not that we really need to dive in there, but I think it just kind of highlights this fact that there's like a lot of capital that's like excited again to get into these deals, whereas the past few years it was virtually zero compared to where we were in 2021 times. So feels worth calling out that point. Before we jump along, and we brought Luke on to talk about a very special topic today. Pendle Boros is exciting. Before we jump into that, going to do a quick shout out to our sponsor for today's stream. Quick shout out to Aptos. Bitcoin DeFi is heating up on Aptos. With nearly 400 million in BTC assets on chain, Aptos users can now earn yield on their Bitcoin via Echo ABTC and OKX XBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. Let's get back to the show. All right, Luke, I want to lead you in on this. And maybe we can start with just a quick coverage of Pendle, what their product is kind of generically, and then the launch of this Boros product, what that means and sort of, what we're looking at. And I guess the big highlight, that's been maybe 1-2 days now since the launch. So kind of covering how things are looking so far and where they're going.
Yeah. So Pendle has two products right now, the V2 markets, which has been the core offering over the past 2 years, which is basically a yield market for any on-chain yield-bearing instrument. Basically allows you to hedge or speculate on underlying yield of a certain asset. And that product has found blockbuster success, particularly in recent months with growth in USDE, and basically headline metrics for Pendle's V2 markets are all at all-time highs and seeing great success on that front. If you look at this chart here, Pendle TVL made new all-time high in the past few weeks, and a majority of this is driven by the growth in the USDE supply, which is now just around 10 billion, up 75% in the past month. So we see that like 53% of all USDE ends up getting utilized on Pendle, and it ends up accounting for about, 66% of Pendle's TVL. And it's really a killer listing and like a match made in heaven between the USDE or SUSD instrument and the market that Pendle offers, where the yield-bearing asset has very low variance in the principal, but very high variance in the underlying yield, anywhere from 4 to 36% yield, what we've seen over the past year. So Pendle basically gives you a market to long or short that rate, and they found killer success with it. But perhaps more exciting over the past week is basically Tuesday, 11 p.m. Eastern time, Pendle released their Boros market, which looks a lot like an on-chain classical swap market. And swap markets in TradFi are enormous. Interest rate swaps account for over 500 trillion in notional open interest. It's enormous. It's highly liquid. And so Pendle's Boros offering looks like a swap market, and they offer a swap market for basically any interest rate that can be inbound via an oracle. And they're starting with perpetual futures funding rates. And the perpetual futures markets, it's about 100 billion in open interest across all coins, all exchanges. And that market's paying, several to tens of billions in funding rates annually. And Boros basically gives market participants a way to long or short or hedge or arbitrage those rates. So they've ran it as kind of a gradual rollout. They started with just 2 markets, the Bitcoin and the ETH market on Binance, with a September maturity. And between just those 2 markets, they started with a 10 mil OI cap on each. They've lifted it to about 15 to 20 mil per market, and they're raising the leverage cap from 1.2 to 1.4x, I believe. And like early metrics are, I would say, particularly promising. It's always a joke to kind of annualize 24 hours of data, but the data we're getting right now is particularly promising. When I checked and ran the numbers this morning, these 2 markets did about 15 million in 24-hour volume. And depending on the fee tier that you're extrapolating forward, I get quoted at 75 bips on the UI. I would expect like a blended fee rate to be closer to 30 bips at scale. But 15 mil in volume, you're looking at over 5 bill in annualized volume. At 75 bips, that's 43 million in revenue. At 30 bips, that's 17 million in annual revenue. And this is just looking at first few days of data on only 2 markets that have kind of small open interest caps. I'm of the mindset that they can list Bitcoin and ETH markets for more exchanges, Bybit, OKX, Hyperliquid. They can list more maturities for those same markets, and they can list more assets as well. So they've barely scratched the surface of their TAM. which at this point in time is funding rates, but it can be a lot larger than that in time. And like seeing the early success, I think there's a pretty clear path where you could have a few $100 million in open interest across all markets on Boros, and it could be putting up 60 billion in annualized volume at, assuming a 30 bips fee take. That's 180 million in annualized revenue, which would be multiples of the 50 million they're currently making on just their V2 market. So yeah, early success, very promising. I think the market was kind of taking the under on this going into the Boros launch, despite how telegraphed or anticipated it was. But yeah, the repricing on Pendle over the past 2 days, it's up about 40% from when Boros launched. Depending on how this data continues to come in, right, it's hard to extrapolate a 24-hour look back to a 365-day time frame. But depending on how that shapes up, what additional markets they list, other assets, other maturities, other exchanges, and we continue to get data come in, I'm particularly optimistic that this will exceed my bull case projections from what I had earlier.
Yeah, I think you make an exciting case there around the potential to expand the product offering. More maturities, more assets. I guess maybe the caveat there is you'd expect to see most of the volume and activity around the largest few markets. So maybe you kind of have to index a little bit to, if you expand out the maturities offerings for BTC, ETH, Sol, XRP hype, take your top assets, what have you. That's probably going to be the bulk of the trading volume, but still maybe there's something to be done in terms of fees by market size or something along those lines, to where those maybe longer tail assets still serve some meaningful revenue.
Yeah, absolutely. They went after the most logical markets first, but I think there could be a strong case for good product market fit with the longer tail assets, Dogecoin, whatever is beneath top 10, even if they have higher variance in the funding rates, then that's a better fit for something to hedge and speculate on than what might be offered in the majors funding rates.
How does this complement or can it cannibalize the product like they already have, like with PT SUSDE? I know you had some interesting thoughts on that.
Yeah, so I think it's complementary in that it basically expands the market that Pendle can service, like open interest and funding rates for centralized exchange perpetual futures is totally new and unique from what V2 has found success with. That being said, the SUSDE market on Pendle kind of already looks like a swap market for funding rates. You could think of the yield on SUSDE as that proxy for what the funding rates are paying. And if you want to short that rate, you buy the PT. If you want to long that rate, you buy the YT. So there's probably already a lot of volume and fees that Pendle is capturing from that sort of activity on the SUSDE markets on Pendle. That being said, what I think it remains most attractive about the V2 offering for SUSDE is the principal tokens for the SUSDE. If you can buy an SUSDE PT at 7 to 30% fixed yield to maturity, fixed return, then that's an incredibly attractive instrument, and you can't get that sort of zero coupon bond instrument through Boros. We continue to see that reflected in DeFi utilization, where now over 81% of the total PT-SUSDE supply is utilized as collateral on money markets. And those instruments exhibit the highest utilization as collateral out of any instruments within crypto. So,
yeah, I mean that synergy between Athena, Pendle, and Aave is incredibly interesting. Like it has been discussed a lot over the past week. At least we have discussed it internally over the past week. Like something that I'm like super interested about is like if you believe SUSD or USD supply is going to continue grinding up and it's going to continue being utilized in Pendle and Aave, like what protocol benefits the most from this like three-way synergy between these? Like my intuition is that it's Pendle just because of the size of the of its market compared to Aave, which has like 60 billion in deposits. And like I haven't looked at the figures, like, but I would guess like PTs make up like 5% at most of their like deposits, whereas for Pendle, it's obviously that's their whole thing. So I don't know how you think about like this synergy between these protocols.
yeah, I would say Athena, Pendle, and Aave like all win in this environment where USDE is growing its supply. Looking at basically like the sensitivity of the inputs to like top line revenue for all three of those, that I kind of came to the conclusion that like Pendle would have the highest sensitivity and growth in revenue, like per unit of increase in the USDE supply, like relative to the fully diluted valuation of that protocol. Whereas like Athena is around 10 billion FDV right now, I think, and Pendle was down at 800 mil FDV a few months ago. It's up to about 1.3 now, and I think they're generating. I don't know. It might be. It's the majority of their swap fees are coming from the SUSDE markets right now. Perhaps we could look at this chart on, I think it's slide 7, PT collateral on top money markets. Yeah, so since Aave listed the PTs, they've gained, if we updated this for another 48 hours, I think it's around 3.4 billion in PT collateral. And you can borrow against these instruments at 89 to 91% LTV, depending on your debt stablecoin. And looking at the borrow capacity across those PT markets, there's no borrow available left. All depositors have pretty much maxed out the leverage, and there's definitely a ton of looping going on, which also embeds some risks. But like for every dollar in PT deposited, there's, call it 89 cents in active loans paying 5% APY, blended between USDC and USDT and USDE. This probably looks like Aave just opened up a line item that's giving them an additional 20 million a year in revenue from that interest take rate. So it's an incredibly attractive listing for the money market. It's high margin, generates a ton of active loans per dollar of collateral deposited. And I think it's interesting just to see how Aave has completely won this whole market, despite being like the third mover behind Morpho and Euler, who own that market historically. Aave runs the listing and they go from 0 to 80% market share in PTs. And if we look at the next chart here, Aave has only listed the USDE type principal tokens, which is like a subset of the total TAM of PTs that are originated from Pendle, whereas Euler and Morpho, through permissionless listings, are able to list that long tail of PTs, whether it's like a USR PT or Lombard BTC restaked principal token. Euler and Morpho currently list those. Aave does not, but Aave still has 80% market share in underwriting against this collateral type. So it really, I think, signals that like liquidity moats can be particularly dominant, where the deepest PT pool on Morpho costs you 9% to borrow against that, when the PT might be priced at 11%. Whereas if you do that same activity on Aave, it's costing you 5 to 5.5 right now.
I totally agree with that, and it's perhaps a knock on the modular thesis like that we had on money markets. Another thing that I find interesting is like just highlighting that the appetite for looping fixed yielding instrument like PTS USD is significantly higher than just looping the underlying asset by itself. Like Aave, like I remember November 2024, they listed SUSDE and they progressively lifted caps, and then it reached about $1.2 billion in deposits. But then that strategy proves suboptimal for looping because the yield itself is very like volatile. So you not only have the risk of borrow rates going against you, you also have the risk of the instrument you're looping going against, like it's also volatile. So that's one thing. And then when they listed like PTS USD, they instantly gained, like as Luke mentioned, 80% of the market share. I know they recently have also listed like also implemented like a SUSD loop product. Like what is the difference between that product and just looping the PTS USD asset?
Yeah, I think your collateral type on the liquid leverage product gets boosted incentives, whereas if you're a PT holder, you basically forego that. So there's some extra coupon those depositors are going to receive that's indeterminate. So that liquid leverage product gives those borrowers the ability to kind of retain that optionality with subsequent distributions, whereas like the PT borrower base does not. But yeah, I've seen huge success out the gate. I think it's 1.5 billion in deposits and over $1 billion borrowed on the liquid leverage.
Yeah, I think to these points, Carlos, you hinted at it, like this idea that the modular kind of lending strategy might be able to kind of edge its way in to this marketplace. It seems like from what we're seeing from Aave, kind of despite being later to the game on some of these asset types, and even if they come later with their own kind of modular markets, it seems like it may not matter. Like they're potentially entrenched enough to kind of continue dominance, assuming they continue to, even if they're 6 months, a year late on these product drops. It's like just come into the market after the fact with the the newest, best and greatest product type, and recapture the market share.
Yeah, it seems like the modular players can really win in offering markets for like the fringe or long tail instruments, like the ones mentioned previously. But then the issue is like those aren't the big fish markets. The big fish markets are the SUSD principal tokens, and I'm sure from Aave's perspective, like that's the most important one to win, as they have the success to show for it.
Yeah, agreed. I was gonna say that sounds almost Apple-esque. Like you're not the latest and the best. You let other people do the R&D for you. You see what works, and then when you're ready, you launch it yourself.
Yeah, I mean, there's very much this like slight premium nowadays for like I guess you could call them battle tested, like entrenched protocols, where you give up some of the fringes, potential reward for reduced risk of operating on the protocol, and it's Aave certainly has that reputation at this point compared to Morpho or an Euler that are more recent, and I guess Euler has had its own issues in the past to deal with as well. So seems warranted to that extent, at least. Cool. Anything else maybe to highlight on Pendle or Boros before we hop along? Go ahead, Carlos.
I have a question for Luke. I'm not sure about this, but are they still using the AMM for Boros, or they're using another mechanism for the swaps?
I believe they have, it looks like a limit order book for traders, but then there's also these passive vaults where you can supply liquidity on a Uni V2 style. So I'm not exactly sure on the implementation at the moment. The docs didn't have the most detail on what that looks like, but yeah, we'll be eager to dive into that and what the vaults can offer with TN on the pod next week.
Nice.
Another thing is they built it on Arbitrum, whereas like the majority of Pendle V2 markets are concentrated on Ethereum. I think that was an interesting design decision to see, a major ETH application try and build like a new core primitive on Arbitrum as opposed to the L1. Definitely think it's a better decision. Gas fees on Pendle ETH mainnet can be pretty egregious sometimes. But I also think, it's one step closer to all the capital on Hyperliquid. And I think there's some benefit there.
Especially if you're building a limit order book, like it's impossible to do that on ETH mainnet, I think. So I do agree. Arbitrum was the best choice. Like one last thing on Pendle, like they also launched on Hyper EVM, right? Like I'm curious to see, like, have you seen a lot of traction on that deployment?
Yes. I believe Hyper EVM Pendle deployment has crossed 100 mil in deposits in just a few weeks. I think the deepest pool is the Kinetic K Hype. It's been priced at about a 10% yield, whereas Staked Hype is paying, I think, 2.5%. But Kinetic has seen huge inflows in the weeks since they opened up deposits. I think it's around 600 million in K Hype is now staked. So yeah, the market's pricing about an 8% return on K Hype through the airdrop distribution. But I think it's a really good and tactical place for Pendle to deploy their markets, because like a lot of people are interested in airdrop farming these new applications on Hyperliquid. And yeah, the market offers perfect venue to basically like take leveraged exposure to the points that give you the airdrop upside. But then on the other side is you can take a K-Hype PT and borrow against it on Hyperlend at 10% fixed. And then that's a pretty attractive instrument in itself, both for people who want the Hype zero coupon bond exposure, but then also Hyperlend to be able to underwrite against it.
I guess it also sets them up for, a Boros opportunity in the future to, set up some markets around Hyperliquid funding rate opportunities.
Yeah, and that's one thing I'm eager to ask TN next week is, the Binance funding rate settles at an 8-hour interval. And like, if you look at the Boros UI for that funding rate settlement, like it's pretty gappy. And there are these big step function moves from, I'm looking at, 10% down to 3% next settlement. Whereas Hyperliquid updates that once every hour. So I'm curious if like the higher frequency of updates for that reference rate can, improve capital efficiency and signal in the Boros market.
Awesome. Yeah, well, I guess this will serve as a little bit of a teaser for, I don't think that episode will come out for maybe a week now, but we will have TN from Pendle on the show next week. Ask him all things Pendle and Boros, what they're cooking, what they're planning. and kind of the future of the platform. So that'll be exciting. Look out for that. And I guess thanks, Luke, for the kind of the quick background and overview there. And we'll go in, I think, even more detail next week on that. Before we jump along to our next topic, let me give another quick shout out to our sponsors to today's stream. Aptos, with nearly 400 million in BTC assets on chain, supported by a secure, fast, and affordable MBM environment, Aptos has become the BTC-Fi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's ABTC and OKX's XBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stax's SBTC, Aptos is the place to go for the best-in-class yield on Bitcoin. Appreciate the support, Aptos. And our other sponsor for today, Algorand. Algo Kit 3.0 includes all the tools and open source resources you need to unleash the power and performance of the Algorand blockchain. Access a resilient network with instant finality, consistently high throughput and low fees, and layer one features like atomic swaps and native assets. No smart contracts required. Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, Algo Kit has all the tools you'll need to build faster, safer, and smarter. Thank you to Algorand and Aptos. Let's get back to it. I guess one of the other big topics that we discussed a little bit before the show and maybe at the beginning as well is the crypto treasury companies, or DATs, as now everyone is calling them. You can't have a trend without creating an acronym for it, I suppose. So the digital asset treasuries have become an incredibly hot topic. We do have a great dashboard on this, thanks to the data team at Blockworks. Shout out to Dan Smith and those guys. I know that was a bit of a team effort and relatively involved, and I think they're still kind of expanding that out as we speak. But I know, Luke, you've been doing some background and looking into some deeper research and maybe writing a bit about these companies. And I know, Mark, you said you listening to Tom Lee, at least, for some of his insights lately on kind of the maybe more from the DAT side of things, like the DAT POV on their operations. So it feels like a good one to get into. I guess maybe I'll preface this by saying we've kind of talked about these at length. Some of the big things have sort of been like, people think this is kind of like a blow off moment for the market. This like bid into these treasury codes that then are buying, Bitcoin, ETH, Sol, and alts kind of indiscriminately. And maybe pumping up the markets a little bit. One of the big takeaways is that there's not like a ton of leverage here to like blow them up per se. But there's a lot of focus around this idea of their premium to MNAV, or, the valuation of the business relative to the amount of, cash plus assets that they have. And so in most cases, it's like, how much Bitcoin does strategy hold relative to the value that strategy is trading at. And obviously they've been employing some of these other vehicles now as well, right? Saylor's got 3 or 4 different instruments in kind of his tool belt at this point, perpetual preferreds and like other sort of maybe more yield focused products, kind of a combination of things. But I guess, Luke, I'd love if you have any insights here from kind of starting to dig into these guys, if there's things you're looking at, and we can kind of go through some of the data that we have on the Blockworks dashboard as well to kind of talk through what's going on here or what's interesting to look at.
Yeah, happy to. I think a good one to start would be on the Ethereum treasury companies dashboard. If we look at basically treasury company holdings and how they've changed since June, these companies have stacked about 7 billion in ETH. Of course, the price has risen a lot during that time frame, but still about 1.8 million units of Ethereum acquired during that time period. And this is also occurred during the same point in time where Ethereum ETFs were basically adding a few billion in inflows as well. So generally, from my portfolio management perspective, I would be much more eager to own the underlying asset that's getting bid by large capitalized players than to buy the treasury company, just because of operational risk associated with that. But like at large, I see great reasons for why these things should trade at premiums at points in times, but also great reasons for why they can and will trade at discounts at particular points in times. So like looking at just MicroStrategy on a year-over-year basis, like they've been able to grow their Bitcoin per share, fully diluted, assuming all debt converts, 7.3%, 74%, 10%, 7.8%. So they're growing their holdings per share, and that's in units, not in dollars, at like a pretty attractive rate. Bitcoin's growing, call it 30% annually. Their cost of capital might be 8 to 10%. And like they're basically just running that ARB. If you can grow Bitcoin per share, I think there's a reasonable framework there to, you should not value the company on the assets it holds now, but the value of the assets it might hold 3, 4, 5, 10 years down the road, which if they can continue to engage in these capital market strategies to grow assets per share, that justifies a premium to me. But then on the downside, a lot of this is basically downstream of not only like the underlying reserve assets realized price performance, but also how the market expects that asset to return out into the future. So at points in time where like these instruments might be drawing down 30 to 50% annually, which is well within the realized return profile of most of these instruments, I don't think public market investors would want like a leveraged or beta to that complex where you're basically compounding downside returns. And I think those points in time, you should see a discount. In terms of like the tail risk to all of this, Mark has done some great research on this. Like the leverage ratios aren't absurdly high. And like Michael, as the big whale in this market, he does have a particularly favorable cost basis. So I don't see like tail risk of like huge liquidation flows as much as just the inflows round trip and become outflows at less opportune points in time. And I think those less capitalized players further out on the risk curve, who in turn have less share of the total float, would probably be more prone to seeing those outflows. So I'm not particularly concerned at this point in time that you'll see the tail risk manifest. But if you start to see the realized return profile of the underlying assets begin to deteriorate and look more negative than the growth in assets per share is positive, you'll start to see some discounts on the board.
I'm very happy to have you on the dark side now, Luke. James Christoph is not going to be pleased, but yeah, I've been saying it's not as leveraged, not as risky as people have been making it out to be. I think we're still suffering from, Galaxy, FTX, PTSD from the ST ETH unwind trade from back in 2021. Everything is scary until we get more comfortable and understand the risks a little bit more. Even you talked on length about Athena and SUSDC and Pendle, and a lot of people thought was going to be the next Luna for a long time, and then now it's one of the biggest players, right? So I think as more education happens, as people start to wrap their minds around this and maybe understand a little bit better, the risk might become a bit more understood. And then I agree with you. I think this is a few winners market. Like there's in the BTC, there's Michael Saylor with MicroStrategy, sorry, and Metaplanet and maybe a few others. I think the same thing is going to happen with ETH. Just going to be a few winners. And I think that's probably how it should be. And the risk really on the tail end, especially from the operational structure. You don't know was it a SPAC, was it a pipe, how much are they going to dilute you, what are early investors going to get? Like a lot of that stuff matters as well. So I'm not saying it's risk free, by no means am I saying that. That a lot of that stuff does matter for investors, but I agree with you. I mean, like, come on, let's just buy the underlying asset. It's going to get the bid from everything. It's simpler. You understand it. like enough said.
Yeah, I do think the Luke's point around kind of sort of these operating as like a beta to the underlying, in essence. I think the concerning part is what you mentioned around the potential reflexivity of, like, if we go back to this ETH holdings, aggregate holdings chart, like these ETH treasury co's, these ETH DATs have accumulated a ton of ETH in the past few months, and it's, you know, up near, you know, between 3,000 and 4,000, a lot of these purchases per ETH. So any move to the downside looks very unfavorably to them, especially if they're already trading at, you know, 1.1, 1.2 premium to MNAV. You could quickly see that trade, you know, sort of like at a discount. And then it's that question mark that you raised of, you know, do we see some of those inflows turn into outflows and kind of add some reflexivity to, you know, the ETH price chart? Or if you go down the line, you know, if it's the Solana chart or to the XRP chart, like these other smaller companies that have been doing the same strategies on assets that are maybe near highs or at highs, compared to, you know, Saylor, who's kind of been averaging into Bitcoin since, you know, for years now, with much lower, I guess I say much lower, but I guess his average cost basis at this point is now like 70K or so. So which we were, you know, we saw close to those levels earlier this year, you know, what, low 80K, high 70K range for BTC. So like you said, it's not unrealistic to see, you know, big 30-50% moves down for a lot of crypto assets. And so that seems to be the main concern, right? Would be a volatile move to the downside.
Yeah, part of what I also think is kind of lost in the DATCO frenzy with all these new ones popping up via pipe or SPAC is just like the unique number of publicly listed US companies that hold Bitcoin or crypto on their balance sheet as a reserve asset. Like a lot of the ones we talk about, like it's kind of their objective function to grow assets per share. But I think like you've seen the number of companies grow by 10x from a few years ago. I think you're going to see more, and you're going to see it from companies that their operational objective is not grow Bitcoin per share, but rather they might view their instrument as part of their balance sheet portfolio composition in excess of something like treasury bonds or money market funds, because the return profile has been so superior to that of a treasury bond at 4% or something. So
yeah, 100%. Would you classify Tesla as already in that category?
Absolutely.
Yeah.
I guess it raises the question of, you know, why, or if or why companies haven't maybe historically done the same with something like gold, which has been, you know, similarly accessible and kind of outpaced the dollar to a broad extent historically. Like it's not, we love the digital gold narrative, but it's the same kind of idea here in essence, right?
Yeah, it's a good question, and honestly, I'm sure my biases and moon math on Bitcoin delude me, but like I think a lot of it's like the super normal return profile, and I think like if these DATCOs continue to demonstrate like a premium to NAV, and that like the market may price a premium on the equity by virtue of that company just holding the asset, then there may be some accretion for shareholders by holding some of their reserves in an instrument that's yielding well in excess of, you know, 4% on an annual return basis.
Yeah, I was gonna it feels like a fair point, right? If no one had ever done it before and then suddenly someone does it and the market gives them a premium for it, then every other company looks around and goes, we can get a free premium by swapping some of our, you know, USD reserves for crypto reserves. and maybe the premium is even in the short term, but it's, we can take the premium and sell some ATM and kind of capture that, and then hey, we got a quick win.
Yeah, I'm gonna agree with that, and I think this term is definitely overused in crypto. But for that, I think it's still early, and I think, like, I remember last year, I think it was Microsoft's board put up for vote whether they should consider adding Bitcoin to their treasury. Not add, but consider adding. That vote got shut down. But I think all of this is just the little crumbs that show you where the direction is headed, and some shareholders now have come out and said, oh, what would have happened if Microsoft had actually considered that vote maybe last year. And you always say that with Bitcoin, with any institution, with any government who does this. And I think maybe another little Trojan horse is that I saw the SEC put out some guidelines allowing stable coins to be counted as cash and cash equivalents on the balance sheet for publicly traded companies, and any company. And so I think once that starts to get a little bit integrated more, and companies have a wallet, a little crypto, I think it starts to slowly expand from there. So I think we're still early in this.
I guess the stablecoin piece is interesting. By itself, though, I don't know if there's enough there, but I think to your point, like longer term, if it means that some of these businesses will, kind of like manage funds on chain, there's like maybe a more meaningful longer term picture there. I do wonder though if that, is something that remains kind of on this like kind of crypto like DAT as a business strategy versus your average, company that has, operating revenues from whatever realized business that they're actually running versus just the sort of financial strategy of, of taking in money and buying crypto with it, and then doing things on chain. Maybe that gap will meld, but it's hard to say at this point.
Yeah, from a treasury management core, I think it has historically been more about career risk than anything else. But as I said, these are just little crumbles to a path that I've been seeing. I'm sure all of us have been seeing for the better half of a decade now in the space in general.
Totally fair. I guess maybe one last thing to highlight, since I saw it come across the desk just recently. There's been a bit of an ICO kind of new mania going on again. And we just got an announcement from the Wall Street Journal that Trump is preparing potentially to IPO Fannie Mae and Freddie Mac later this year, aiming to raise $30 billion at a $500 billion valuation. A bit interesting of an announcement. I think it plays into a few things, I think, from the Trump camp, but goes to show that like this IPO excitement and at least on chain, the ICO excitement, like we still seem to have some legs here. Circle remains, elevated, I think, well beyond anyone in like on CT's expectations had for the stock at its launch. And we're seeing more crypto companies like try to go public recently. I think Bullish, which is the parent company of CoinDesk, if I'm thinking correctly, is planning to IPO maybe next week or the week after. I'd have to check the dates, but that's another one coming up. And I know that Kraken and Gemini are potentially in the works. They've done some like initial filings to start digging in there. And I think the other big thing that we've started to see is like playing around with tokenized stocks on chain. Now, just recently, there are protocols doing like tokenized pre-IPO assets on chain. Basically, there's a bunch of like latent demand for people to bid, assets and companies that previously they could not. Seems to be the thing going around here. I don't know if you guys have any thoughts here. Like, are we personally looking at any of these IPOs? Like, is Bullish on our radar? Are we just kind of like letting those play out? I've been taking a look here, and it really, like, Figma was another big one that popped quite significantly, and it's off from those highs. Like it ran from, I think the IPO price was something like $30, went to like 140 or so, maybe aftermarket on that first day, and is now maybe back in the 80 to 90 range. maybe looking somewhat expensive, but regardless, IPOs are getting pops, and crypto companies are looking to get on board. So is this something we're looking at more closely?
I think I'm scarred from my time in TradFi, where I just never really touch IPOs. I always wait for the dust to settle and maybe do a loop, and that has been, especially recently, to my own loss. Circle IPO, Figma, and when I saw Figma trading at 140, I was doing quick math. 50% of Adobe's valuation with 5% of the revenue, and I was just like, the math isn't math. And I think it probably is going to be a good trade to participate in these instruments. I mean, there's clearly demand for them, but I don't know. Maybe the boomer in me is just going to hold me back.
When we're seeing more and more ICOs on chain as well, right? I mean, Pump was the big one, but there's been smaller. There's been talk, at least in the chats and internally, around this like Heavendex that ran an ICO on Solana just recently, or sort of like they raised the money. They're in the works of launching that token. And there's been more platforms like Metaplex, Genesis, kind of like setting one up. MetaDAO is kind of experimenting here. I guess Believe, although that's kind of been more meme coin adjacent, but we've been seeing like this stepping slowly of like meme coin launch pads to like a concerted effort to have, launching of actual companies, or at least crypto adjacent businesses, doing ICOs again on chain.
Yes, make ICOs great again. I'm not a fan of tokens, but I love ICOs. This is when I got into this space, just having access to new stage companies. It just felt like early stage investing. You get so much of the upside. It's not the same level of VC lockup. I mean, everybody knows this. We're in the space. I'm not gonna ramble. I'm gonna stop. Luke and Carlos, do you all have any thoughts? Okay.
Carlos, yeah. So let's see the announcement. What I like is like 24/7 access, freely transferable, no minimum investment, no paperwork, no KYC. I like that you can get access to the instruments like on those terms, really for call it small fish or retail. And also see like use as collateral for loans, lend out for yield. So like that's something I'm kind of interested to see how that develops. I will not be a lender or a borrower myself, but at least like equity is on chain. I feel like you need better pricing structures. You need better like redemption or arbitrage features to like give those more liquidity and I guess like redemption clarity to price them better. Because like right now, you look at the X stocks market on Camino, there's only like 1.5 million in X stocks posted as collateral, which like I'd say is pretty is not that successful, and there's not much demand to borrow against those instruments. So like I'm unsure if that's the angle that like needs to be offered. But like at large, giving more people access to the equity like on those terms, I think is a big improvement.
Yeah, and then even with DeFi, what we've been doing for launches with auction mechanisms, this space is great at auctions. Look how much money Circle and Figma and these others have left on the table from the IPO pops. Like literally tens of billions of dollars that the company, equating to billions of dollars more on these companies' cash flows, on these companies' balance sheets, which they can use for growth, right? I mean, like direct on-chain listings. I think these advantages need to be touted a little bit more in this space. I don't think we're ready for it yet, but again, crumbles. Carlos, we lost you there for a sec.
Yeah, sorry.
Glad to have you back, sir.
Can you hear me? Okay, yeah. Other thing that's interesting, like that happened recently, I don't know if you discussed that, but it's pre-IPO trading. Like I think we've seen that live on Solana today, maybe. that you can now trade tokenized pre-IPOs on Jupiter, and then you also have like this virtuals or I don't know what it's called, Benchals platform on the Hyperliquid to trade pre-IPOs. I don't know if you guys have any thoughts on like trading like private equity on chain and how that might look like. Maybe like my take is maybe it has more demand than just trading like public equities, because public equities you can already trade that like on your regular brokerage account or whatnot. So it's maybe more directed towards people in like geographic jurisdictions where you don't really have access to like a regular brokerage account, whereas pre-IPO companies maybe have a larger TAM just strictly on chain.
Yeah, I think I would generally agree there. Like it feels like the a lot of the growth for on regular on-chain equities might come from these platforms, like a Robinhood or a Kraken that offer it to a large customer base that maybe can't trade those assets for one reason or another, like you mentioned. Whereas, bringing an asset that's currently untradeable by the public into the fold feels, at least in the immediate term, like there'd be more, like a little bit more latent demand from, your average retail guy that's on chain. The interesting part, I don't know the exact specifics of the rollout on Jupiter, but like for Ventuals, for example, it operates as something of like a perps market. So you go long or short, and then you have some funding there as a factor. And really the way that you're like correct in that trade is if I guess either if a bunch of other degens get long after you, or the alternative being, if a next raise milestone at a higher valuation occurs, or they actually go public, which, like me personally, I don't know that I would necessarily want to be long and paying funding for something if my expectation is like 5 years out, this thing is going to go public at a valuation 10x higher. It would suck to pay funding for 5 years on something that I'd want to just hold and go long. I don't know if the Solana on-chain version kind of accounts for that, and you just get to hold like a share of it, and there's no kind of caveat there from a funding perspective. That's how it seems at a glance, but I'd have to dig in further. I don't know if you guys have thoughts there.
Yeah, the funding is a deal breaker, but if it's if we can get these other platforms that already allow users to trade private equity, like the Hives and the Moonfairs and the Carters of the world, and they just all use this as like the DeFi mullet. They just use this as a back end, and they plug in for liquidity, and then now it's not all siloed in these different platforms. I think that is a great use case. Like I think on a lot of private equity, I mean, people are staying. Companies are taking longer to IPO, more now than ever. And I think a lot of these private investors still want some liquidity, and I think bringing them on chain is probably the best technological and way to do that for all of its purposes.
I guess maybe relevant, one last announcement here. We knew something was coming from Coinbase. Brian Armstrong dropped the rollout of DEX trading in the US, excluding New York, which is always a funny caveat for them. Our goal is to make Coinbase the simplest way to access on-chain markets. You'll be able to trade millions of base assets directly in the Coinbase app. Support for Solana is coming soon too. I feel like this plays into that idea that you have these big platforms with lots of users already trading certain assets, and I think kind of exposing them to the on-chain environment like seamlessly in the via the UX that they're already operating from is where we'll see a lot of growth in, if it's on-chain equities, if it's on-chain pre-IPO equities, all of those products combined. We know that Coinbase is looking in that direction as well to do on-chain equities, so feels like there's kind of an inevitable kind of integration of these parts and pieces. And obviously Kraken, Robinhood, they've both been taking steps in that direction too. So this seems to be kind of like a confirmation of a step in that direction. Put all the things on chain, expose them all to your big user base, get them trading everything.
Yeah, this should be pretty good for Aerodrome, no? I imagine that's going to be like the liquidity backend for most of those trading.
Yeah, I feel like you're right.
Yeah, that's a good shout. Thanks, Danny, for bringing this up right after my point. Really nails the head there. I'm seeing Arrow is up 16%.
Yeah,
I
it just
had a
popped.
popped. Yeah, there. So good shout, Carlos.
Yep, definitely makes sense. I think you could probably go down the base application list. Who's going to be most impacted? We already had seen them do their integration with Morpho. So to do like a DEX kind of aggregation makes sense. You would see Arrow have some excitement. So if there's other products to come in the future, then might be worth considering what other base apps could benefit. I guess more recently Zora has been one as well, right? They integrated coining posts in the base app onto the Zora platform, and Zora caught a big kind of move off of that news as well, on top of their new like flywheel model. So Base has definitely been pushing up the apps within its ecosystem lately. Cool. I guess if there's no other thoughts, I am happy to call it there. I feel like we covered all of the things that were top of mind today. Any other big takeaways, gentlemen, or is it time to go touch some grass and enjoy the nice weather this weekend?
I think the silence.
Yeah, nobody. Don't speak too quickly.
Agreed. It's grass touching time. But I want to say this because I haven't said it probably since maybe January on this pod, and I'm gonna just say don't fade the ETFs. I haven't said that in a while, and it felt like it was the wrong thing to say. But now I'm getting renewed confidence again.
I like it.
Yeah.
We'll leave it there, gentlemen. Enjoy. Hopefully, I mean, there's nice weather by me. There's nice weather by Mark. Hopefully, there's nice weather by the rest of you guys. I'm manifesting that for the global audience out there, and we will see you all next time.